On June 12, 2026, SpaceX rang the opening bell at the Nasdaq. By the end of that first trading day, the company was worth more than $2 trillion. It was the largest initial public offering in history, more than 3 times the size of the previous record holder. The stock priced at $135 a share. By Friday's close, it was trading near $161. By the following Monday, shares had climbed another 20%. SpaceX briefly touched a market capitalization of $2.21 trillion, putting it within reach of Amazon. For a single company, that valuation now sits above Tesla, above Walmart, above nearly every business on Earth except a handful of the largest technology firms in history. So the question becomes simple. Is this valuation justified, or is it a story that has outrun the numbers behind it? Let's start with what SpaceX actually sells. The company has 3 businesses: rocket launches, which made SpaceX famous; Starlink, the satellite internet network, which is the only profitable segment of the company; and a newer artificial intelligence division, formed when Musk merged SpaceX with his AI startup xAI back in February. Last year, SpaceX generated roughly $18.7 billion in revenue. That is a real number, audited and disclosed in the IPO filing. It is also a fraction of what the current valuation implies. At $2 trillion, SpaceX trades at more than 100 times last year's revenue. For comparison, Amazon, a company more than 10 times SpaceX's size by revenue, trades at roughly 4 times sales. Even Nvidia, at the center of the AI boom, trades far below SpaceX's multiple. There is no major company in market history that has sustained a valuation this large on a revenue base this small. That gap is exactly where the disagreement begins. On one side of the argument are professional valuation analysts who study companies for a living. Aswat Damodaran, a finance professor known for valuing some of the biggest companies on Wall Street, called SpaceX's prospectus numbers a hallucination. He said even a $1.3 trillion valuation already pushes the bullish case to its absolute limit. Morningstar's analysts went further, valuing the company at $780 billion, less than half of where the stock opened. CFRA, a major ratings firm, initiated coverage with a sell rating and a price target nearly 30% below the stock's first trading day close. These are not random skeptics. These are professional analysts whose job is to separate price from value. On the other side of the argument are people who think in decades, not quarters. Dan Hansen, a senior portfolio manager who invested in SpaceX while it was still private, said investors should think of the company as 3 businesses in one: launch, Starlink, and artificial intelligence, each with the potential to compound for years. New Street Research initiated coverage with a $165 price target, and one of its senior analysts said the only way to justify the valuation is to stop thinking in quarters and start thinking in 20 to 25-year horizons. That is the core tension in this entire IPO. Wall Street usually prices companies on what they will earn in the next 1 to 3 years. SpaceX is being priced as if its next 3 decades are already guaranteed. Here is where the numbers get more complicated. SpaceX lost nearly $5 billion in 2025. Its capital expenditures in just the first 3 months of this year totaled $10.1 billion, more than double what it spent in the same period a year earlier. Most of that new spending went toward building artificial intelligence infrastructure, not rockets. That detail matters. Starlink is the only profitable piece of this company. Its profit is currently absorbing losses from rocket operations and from a brand new AI division that is burning cash at an accelerating rate. In other words, the most reliable part of SpaceX's business is subsidizing the riskiest part. Elon Musk has offered his own answer to the skeptics. In a post following the IPO, he said SpaceX might be able to reach approximately $1 trillion in revenue by 2030. That would mean growing from $18.7 billion in revenue today to roughly 50 times that figure in just 4 years. No company in history has ever grown revenue at that pace, at that scale, in that short a window. Not Amazon, not Apple, not even Nvidia during the most explosive years of the AI boom. That does not make the prediction impossible. Musk has defied conventional growth curves before, most notably with Tesla and with SpaceX's own rocket reusability program. But it does mean the entire $2 trillion valuation rests on an assumption that has no historical precedent to support it. There is also a structural detail that matters for anyone watching this stock. Elon Musk retained more than 82% of voting control after the IPO. That means public shareholders are not just betting on SpaceX's businesses. They are betting on one person's judgment, with almost no ability to challenge his decisions through a shareholder vote. For some investors, that is a feature. Musk built the most successful rocket company in history from nothing, and many believe his control is exactly why SpaceX outpaced Boeing, Blue Origin, and every other competitor. For other investors, that same concentration of power is the single biggest risk on the balance sheet. There is a hidden winner in all of this that almost nobody is talking about. Alphabet, Google's parent company, owns roughly 4.9% of SpaceX. That stake is now worth about $105 billion, making it one of the most lucrative private investments in Google's history. But Alphabet cannot simply cash out. Lockup restrictions and potential tax consequences mean that paper gain stays mostly theoretical for now. So where does that leave the average investor looking at this stock today? The bull case rests on 3 pillars: Starlink's monopoly-like position in satellite internet, Musk's unmatched execution track record in aerospace, and a 20 to 25-year window long enough for the AI and launch businesses to mature into profitability. The bear case rests on 3 different pillars: a valuation already 100 times revenue with no historical precedent at this scale, mounting losses in 2 of the company's 3 business lines, and a governance structure that gives one individual near total control with minimal accountability to public shareholders. Both cases use the same facts. They simply weigh them differently. What is not in dispute is the scale of what just happened. SpaceX didn't just go public. It became, almost overnight, one of the most valuable companies on the planet, built on a level of investor conviction that has no real comparison point in market history. Whether that conviction is visionary or excessive will not be answered this year, or even next year. It will be answered over the very timeline the bulls are asking investors to trust. 2 decades, maybe more. For now, the only certainty is this: SpaceX's stock price reflects a story about the future. The company's revenue, for now, still reflects the present.